Ernie, looking at the numbers for March, are we seeing an improvement in the Mid-America?
We are. Our survey of supply managers in 9 states for the month of March, the overall index, which is a leading economic indicator for the region, was up for the month and really in a pretty good growth range. In other words, we ended the quarter 1 of 2014 on a very positive note. I think quarter 2, the numbers are going to be even better. Of course, there's always the opportunity for some disruptions, of course, with what's going on internationally. But when we look ahead, right now I expect job growth to continue. We expect the overall growth for the 9-state region. That's the region stretching from North Dakota and Minnesota in the north to Oklahoma and Arkansas in the south, looking pretty good for the month of March. And again, I expect that to continue.
What about employment for the region? How does that look?
The employment gauge was down a bit, Cindy, but still in very good growth range. When we look at the overall regional employment level, it's now at its highest level ever. And obviously, then we're above the pre-recession levels. And so that's looking very good. Now, on the negative side of that, we ask about wage growth for the next year, and that's not coming in too strong, about 1.8%. over the next year, and of course that's only slightly above expected growth in inflation, which is about 1.6. Now I expect inflation to come in even higher, perhaps as high as 2%, so that when you compare that to inflation in terms of prices, wage growth is not where we'd like to see it. But jobs are growing. We're seeing job growth, for example, in construction. We're seeing it for food processing. We're seeing it for particularly durable goods, which are connected to the international markets. International continues to grow, continues to push the economy forward. Again, the 9-state regional economy.
What about wholesale prices? You mentioned inflation. What are we seeing right now?
Right now, the index dropped a bit for the month of March, but it's still in an area where it's pushing up prices a bit faster than we'd like to see. I think there is more inflation out there than the Federal Reserve expects, and of course, that just means higher interest rates. And we're going to see higher interest rates in the weeks and months ahead as the Federal Reserve pulls back on its stimulus program. That would be what's called quantitative easing 1, 2, and now quantitative easing 3. So companies out there, consumers out there need to anticipate higher inflation, a bit higher inflation, but also higher interest rates for sure on the long end. Now on the short end, short-term interest rates are going to remain low, but on the long end, we're likely to see the Federal Reserve will be raising those in the weeks and months ahead.
Looking at the trade numbers, how does it look for the Midwest?
The trade numbers were very good for the month of March, and even going back to February, we're seeing our new export orders rising. We're seeing, of course, the imports still being a little stronger, the import numbers rising as well. Now, I should say the export number dropped a bit, but still in very strong range. The import number rose, and it's also in a solid growth range. So both exports and imports looking pretty strong. Imports, of course, because the businesses are growing, and that means they're going to be purchasing from abroad. New export orders growing because we're selling abroad. And of course, unfortunately, we did have some supply managers at least comment that they're concerned about some trade embargoes. In other words, right now, of course, what's going on in Crimea or the Ukraine, that could spill over. We did have, back to, if you remember the 1980s, at least the Carter administration, 79 to 80, where there was a trade embargo with Russia, and that was an invasion of Afghanistan. Now we're the invasion of Crimea. If that should result in trade embargoes, that's a big risk, and that was voiced at least by some of the supply managers in the surveys, in their comments. And so that's a real potential risk for the regional economy.
Looking at that and the trade numbers and the employment numbers, what about confidence for the region?
The confidence was down just an ever so slight amount, but still in a very positive range, just a bit below 60. And of course, the numbers range between 0 and 100. Anything above 50 is growth positive. They're expecting growth over the next 6 months. The confidence index, which reflects that, was a pretty good number at about 59, so that's good. confidence is pretty high out there, that even with the weather that we've had, even with the international tensions that we've got, this economy is moving ahead, and our numbers show it. I think certainly the industries that we're seeing growing out there in the region, food processing looking pretty strong for most of the states that we survey. We've got metal manufacturing, anything connected to automobiles. Automobiles doing very well, of course, not so well for GM in terms of the recall, but in terms of the sales, all the automobile manufacturers are doing well, and that's spilling over into those who provide supplies for those manufacturers, whether it's metal, whether it's plastic, whether it's parts and so on, components. That's looking very strong. Even agricultural equipment, which again, the agricultural sector is weakened a bit, but selling abroad, they're looking good for much of the region. So it was, again, it was a good report for the month of March.